Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. His favorite food is pistachio-flavored Italian gelato. Your host and my dad, Matt Hansen.
Welcome back to Better Returns. We've got our special guest here, Sean Thomson from Thomson Multifamily Group. Sean has 13 years of experience in real estate and has moved from single-family residential to multifamily in the past 3 years. His approach and philosophy are informed by his passion for building wealth and achieving financial freedom for his family and his investors. The biggest risk to investments is asset management. I'm so excited to have him on the show to talk about this. Which is why Sean has made it his passion for developing teams to be best in class and help other independent owners better asset manage. So welcome to the show. You're the first asset manager I've had on the show, so I'm excited. You're going to drop some great knowledge with us, Sean.
Yeah, I hope so. Thanks for having me on. I really appreciate it.
Yes. So let's get started with your origin story. How did you get involved in real estate?
Well, I've been a worker my whole life. I've had a job since I was 12 years old. And, I grew up with a family that just said, if you work hard, save your money, that's how you kind of win in this world. And, that's true. You do have to work hard. You do have to save. You do have to be smart about things. But I always knew there was something kind of more. But I worked until, I was nearly 40 in jobs, just trying to be a good father and family man and bring home some pay. And I made a decision to say, hey, that's it. I'm going to make something that's mine, that I control and own. And I always knew real estate was kind of one of those things. Of course, you read the pivotal book, Rich Dad, Poor Dad, yes, that talks about, investing in real estate. And so real estate's always been something that I was interested in. And I thought, well, if I'm going to start my own thing, maybe it might as well be in real estate. And so I didn't really know how to do that on a business level. I mean, buying a house, fixing it up and selling it for a profit isn't really not that hard to do that once time, but to do that every month or every week, it's a challenge, and it's a unique challenge. So I didn't really know how to do it, but at some point I just decided I'm going to go buy a house and figure this out. And my contractor at the time, when I bought my first investment property, had just bought a Homevestors franchise. And I don't know if you wouldn't know what Homevestors is, but it's the We Buy Ugly Houses guys. You see the signs on the highway. And so he started telling me about this franchise he just bought and how it was teaching him a system, and that had kind of been what I've been looking for this whole time. And I said, well, I want to do that. So I went down and bought a franchise. And what they did was they had me, they had coaching programs, teaching programs on how to kind of make this into a business. And that was my start into real estate. And my goal with real estate has always been, income. I want to have monthly income. And with single family homes, I was doing fine. I was making decent money. My business was never that big. I've never been concerned with being the largest operator. I just want to be good at what I do. That's always my goal. I want to be the best if I can. And so we had a nice small business of making money, but my ability to scale that to a level that would make a monthly income for me that I was going to be happy with was going to take a really long time. And so I thought, well, there's got to be a better way to do this. I'm working really hard, and it doesn't seem like I'm going to achieve my income goals. So what other options are out there? And I always thought apartment buildings were kind of out of my reach. I didn't think that a guy like me, a regular average Joe like me, could go and buy a big apartment complex and make money doing that. I thought that was reserved for the wealthy, the REITs and the Wall Street guys. And I met someone that was doing it, that was a syndicator and putting those deals together. And I heard his story, and I thought, well, if that guy can do it, I can do it. And so I asked, can you show me how this works? Can you teach me how to do this? And luckily he had a training program in his, as part of his business. And, I went through that and started developing my business. And this is while I still had my single family business going. And it took me about a year probably to really decide to pivot my focus away from single family into multifamily. And that was, we're probably 3 years. Yeah, probably 3 years ago. That's when I made that final move from single family to multifamily. And ever since then, we've just been working on, acquiring assets and building our business. Sorry. Along that path too, my daughter was going to college, and I started talking to her. She came to me one day and said, "Hey, Dad, I think I might want to take a gap year and travel Europe. And I said, baby, I'm not going to pay for that. You got to figure out how to pay for that. And she said, well, that's why I'm talking to you. I want to figure out how to have some passive income through real estate so that I can travel and not have to worry about having a job and things like that. So we started working on a strategy for her to how many rental properties she needed, how much money she needed to make. And as we were kind of going through that process, we started talking more and more about my business and what she wanted to achieve. And it came to a place where she changed her mind about the gap year. And I was transitioning my business out of single family kind of at the same time. And we just said, hey, look, why don't we join forces, build something together that'll, can retire mom and dad, and then she can take it and build whatever she wants out of it, in the future. And so that's kind of what we decided to do. And so she's my partner in everything that we do. And that's kind of where we're at now. And we just decided to build another company that she's partnering with me on that as well, which we'll talk about.
Excellent. Excellent. That's good. We were similar here. Hanson Holdings, kind of a family business. My wife does a lot of my marketing. My son's involved in the production stuff and a little bit of acquisition here and there. So I get that. It's really great. And it's fun that you can work with, your family members, and what you're going to be leaving is a legacy business, really, to your heirs and your daughter, Abigail. That's great that she wants to work with you. Wonderful. Well, let's talk a little bit more about asset management. And I think this is a real deficit we see, particularly with newer, smaller syndication groups, is that they don't have a lot of asset management experience. And I think across the board, mostly, unless you're a big, huge company and you've got 15 people working for you, you've got a full-time asset manager. But a lot of syndications will have people that are just kind of moonlighting as an asset manager. And that's kind of scary to me because that's the most important role. We close these $40 million deals and then we pass it off to an asset manager that's going to manage the property manager for the next 6 years, potentially. You really want to make sure you vet that individual well and that they're trained well. And that's what we're going to talk about today, because it's what you're really focusing now. In addition to your multifamily acquisitions, you're doing something else, which I think is great for the industry. So let's talk a little bit about asset management, just in general, what it is, because maybe not everybody knows what an asset manager does. Let's talk a little bit about the kind of the key roles and responsibility of an asset manager. Then we'll get into some other details.
Yeah, well, you can boil it down to two essential functions of an asset manager. There's really two essential functions. It's to optimize outcome and to mitigate risk. Those are as an asset manager, those are really the two things that every decision you make should stem from those two outcomes, right? So you're trying to take the investor's returns and the production of returns of that asset and that investment and maximize those. You're trying to get every ounce you can out of that return for your investors, right? And at the same time, you're trying to mitigate any sort of downside there might be. You want to have optimal insurance. You want to have, all those sort of risk factors taken care of. Any sort of liabilities that may be involved. You want to make sure you're covering those things. I'm sorry. And so those two essential functions are really kind of where everything stems from. The asset manager, as a role, their primary function is to oversee property management and then to report to ownership, and if they're not in the ownership seat, of the investors that are invested in the project. So the property management company runs the day-to-day operations on site, and they're the property-focused and community building-focused entity of the operations. The asset manager oversees what they're doing. And then the asset manager also makes sure that the decisions that are being made on the business plan are, in continuity with the objective of the business plan as well. So what the property management company is doing every day should be trying to achieve a goal that is in the plan for the long-term execution. Like you said, it could be 6 years of executing a business plan that you're trying to get to this outcome. And all along that process, you want to make certain that your entire team is informed about what's happening on the project, the good, bad, and the ugly. Things go wrong all the time in these operations, and hiding them from everybody doesn't do any good, right? You need to make sure everybody understands what's happening, and then what sort of solutions you're taking to make those things better, right? So that's the essential role of an asset manager.
Excellent. Now, you touched upon that. Sometimes an asset manager is a general partner as well, and sometimes they're a third party. What are your feeling on those? I've got my personal feelings. If you're a general partner that also is an asset manager, or do you have a for-hire asset manager that's not part of the general partner team? Pros and cons.
Well, I don't know. There's not that many third-party asset management services available that I know of. I think there's very few. Most of the syndications that I see, the asset management is handled by someone on the GP team. So they find the most appropriate person of the sponsorship group.
Right.
That seems like, oh, you're the most organized, or you're the best, you're the CPA, you're the one that seems to be able to accomplish this day-to-day task the best. So we're going to make you the asset manager, which is fine. And there's a ton of guys, people in the asset management seat that are doing fantastic jobs. They're naturally good at it.
Mm-hmm.
But then most syndicators are kind of like me. They're like, you would never want to hire me as an asset manager. I make a terrible asset manager because I'm not in the day-to-day grind of things. If you show me a spreadsheet, I start to nod off a little bit. So, so you want to have the right person in the right seat, first of all. And sometimes as a GP group, you kind of get lucky and you get that right person. But the goal, I think, should be to have someone that can do the job, that wants to do the job, and that will get out there and do the job, right? So that's the essence for every role that you have in any business, really. Can they do the work? Do they want to do it? And then will they get out there and make it happen? And so exactly. I think whether it's a third party or someone on the GP team, as long as they meet that criteria and they can do the work, you're going to have success, right? And I think that's really the critical thing. What we found is a lot of syndicator or sponsorship groups are full of people that they just shouldn't be in that seat. They're personality wise, they're not qualified, or they're just not suitable. They just don't have the right, they don't have any experience in asset management for real estate. They've had a lot of experience doing other things, which some of it translates, but you have to have some background in real estate to understand what changes to make and what directions to go, and there's some nuance to that, right? And so some of those things are just kind of set up to fail from the beginning. If you have the wrong personality, the person really isn't capable of doing the job to begin with, and they just don't want to be in that seat, you're never going to have success there to begin with. So what we've tried to do, I guess, in our business, when I was developing our syndication business, I realized, because I've been operating our business, our multifamily or our single family assets our whole time. We've been our asset manager for years, and during our business, so we think we're pretty good at asset management. And on the multifamily side, it's the same business, except that it's the complexity is 100 times higher, right? There's a lot more levers to pull on, a lot more KPIs to monitor, a lot more things to happen. And so the complexity goes way up. So for us, we wanted to make certain that we were capable and prepared and best in class at asset management. We talked to a lot of high-level investors early on in our business development on our multifamily acquisition side. And they always asked us that one of the first questions they asked us was, who's going to asset manage this for us, And I started to realize, that's a very critical seat. It's important to the investors that matter to me. And so we started investigating what is the best practices in asset management. And we talked to syndicators, we talked to property management companies, we talked to asset managers, we talked to investors, passive investors in these deals. And the experiences that we were hearing from people were, it was alarming. I talked to investors, passive investors that are in syndications, that they would tell me stories like, the sponsors were great when we put our money in the deal, but I haven't heard from them in a year. I haven't gotten paid. I haven't seen reports. I haven't talked to anybody in a year. And it's like, well, that's completely unacceptable.
Agree.
And I've talked to property management companies. They're a lot of people think the property management company and the asset management company are in opposition, and it's not. It's a very symbiotic relationship. Those two have to function well together, and it's a push-pull system. And if they don't, you're never going to get progress made. You're never going to be successful. And a lot of ownership that are sitting in that asset management seat, they can't get decisions out of those guys. They can't get the money they need. They can't get the resources they need. So you're handicapping your property management group, who's trying to do a good job for you, by just not neglecting that relationship, right? So, it's all the way from property management to investors. It has to be a nice flow through that system. And we heard stories after stories about, syndicators that, oh, my property management company did this or that. And, the on-site team is stealing from us. And it always boiled down to monitoring what was happening on a day-to-day basis and how successful you were doing that. Right. And so we started to see, we wanted to build it for ourselves, right? This original asset management business. We started to see, hey, there's a real need for an organized, experienced team that can come in and say, hey, we'll take care of this for you. It's a day-to-day business. It's a day-to-day job. We'll be on the phones. We'll make sure the KPIs are happening. We'll set everything up for you and monitor it, make sure you're on track, right? And do all the reporting and take care of these things. It's a daily grind type job. And so we started to develop what we wanted for our business into a service that we could offer out to a third party. And we're just launching it now, really kind of, and the idea for us was to build systems and processes around experience, right? And support that with experience. So we sought out people in our orbit that have a ton of experience. And we've just been building this out it's been about a year, maybe a little longer, that we've tried to develop all these things to make a successful asset management for anybody that we could work with. So that's where we're at now, is launching that.
That's phenomenal, Sean, because it's systems and processes. Anybody that's run a large business knows that. And it's KPIs, key performance indicators. We're going to talk a little bit about that in the past, or in the next segment here. But that's great, though, because a lot of people by default, oh, I'm the most businessy person on the GP team, I guess I'll be the asset manager. No. We don't want that. We want the person that's got systems and processes. And that's what I love, that you're going to create templates. And so everybody knows that, that's aligned with you, or, working for your team, is that here's the things you do every single month or every single week or every single day. That's great. That's wonderful. And it is really a need in this industry. So I'm so happy that you're sharing this, and hopefully we'll hear some syndicators reaching out to you for assistance in asset management and getting scaled up, or you guys providing that third party service as well. Is that you would not only do the training, but you're talking about also providing that service?
Yeah. So we're doing, I guess for me personally, there's three phases. I wanted in my business. So my Thomson multifamily group has a really strong asset management component to our business. We decided to launch that as a third party service. So if someone, if you're buying a new property, you could come to us and we can help support you through that process and then asset manage for you as a third party. We don't necessarily need to be on the GP for that.
Right.
And then we're also working on, because we see such a need for some sort of continuity in this, what are the best practices? What are the key KPIs? What are all these things that you should be doing on a daily basis? And no one's I don't think, sort of synthesized for a small operator. I'm not talking about guys who have billions and billions of dollars under management. Those guys have their own teams. I'm talking about the guys who were small operators, six properties, 2 properties, and they're trying to be successful, and they're trying to get over this hump of inexperience to the experience, right? That's kind of our window, and where we think we can serve the most people. And we're hopefully going to be able to create, with my partners, we're creating an education platform that will set those sort of standards for, this is what you need to make sure you're doing on day one. This is what you need to make sure you're looking at every day. These are the weekly things you should be looking at. We're going to create we're creating it now, actually, the curriculum for how to be a good asset manager, so that someone that's getting started in this business, they can just learn what they need to know before it's too late. I think most of the time, the sponsors put together these deals, and on day one, they're handed the keys to this operation. And now they're like, okay, now what? Right. They're trying to figure out, what do we do first? And I think we can sort of take some of that mystery out of that and create an education platform for that. And we're doing all that now.
That's excellent. So instead of learning from the school of hard knocks, we learn from your playbook that says, okay, these are the things you should do. And a lot of it is just preventative measures. You're meeting with the property manager once a week. You're looking at all the metrics. You're following up when you see there's an anomaly, and you're getting on things in transparency, as you indicated. I know I've passively invested in well over a dozen deals. Some of those are like so poor communications. I learned more from the bad syndicators than I did for the good ones. Those are the ones I'll never treat my investors this way, because they should be getting monthly communications. If something goes sideways, have a plan in place, but everybody has a fire or something like that. Don't hide it, disclose it, but have a process in place to manage it. So I think that's really powerful. So let's talk a little bit about, so what should, as a passive investor, what are the questions I should be asking a sponsor about the asset manager for my investment? What are the key questions?
Well, what you want to try and boil down is how important is this role to this particular sponsor group, right? A lot of sponsor groups talk about asset management and their track record and things like that. But you can find out pretty quickly if asset management is something that they're focused on, or if it's kind of an afterthought, right?
Right.
And you want to just ask them questions like, do you have a dedicated person that's going to do that for you? Do they have experience in this? Have they done this before? Do you have systems around your operations and asset management? What do those look like? What sort of reporting should I expect? A passive investor should be getting a monthly summary on property, operations, and a full financial report, or or at minimum, they should be getting a summary of financials, right? I think that would be like the bare minimum. I think for us, we prepare a nice summary for the good, the bad, the ugly, and all of our assets, and then a full financial report, and that goes out to our investors every month.
Right.
And you can even, that's like that for us. That's the minimum. I think you can do phone calls, you can do webinars, you can do all kinds of other things to keep your investors sort of connected to what's happening. Your investors are effectively partners in this deal. Mm-hmm. They deserve the same sort of I don't know, respect is the right word, but they deserve the same sort of openness and access to deal information that you have as the operator, right? So I think getting that information out and being open with it is critical. So you want to make sure that as a passive investor that is going to be coming to you. If your syndication team is not sending you reports every month, or quarterly at the minimum, I would be very wary of investing with those guys. It just seems like they're not interested in sharing, or I don't know what you would call that, but I would make sure that you're getting in reports for sure.
That's neglect. That's neglect. And again, I've been in that situation. It's like, oh, never invest with those people again. And word spreads pretty quickly of okay, who's communicating clearly what's going on in the deals. And like we always have monthly updates, financials, and all to our investors. You just have to. I think once a quarter is not even enough, because things can change in 3 months. Things can change dramatically. Look at COVID or the economy. You want to know what that occupancy level is. You want to know what your break-even point is. You want to make sure there's anything going on with the properties that that they need to know about. That, okay, you know what? Before you hear this in the news, we're already on top of it. So right. I think that's really key. So let's talk a little bit about the KPI. So go ahead and explain what a KPI is and the ones that you think are critical that everyone should be receiving.
Sorry, Matt. So KPIs are going to be your key performance indicators. There's also key process indicators if you want to get deeper. I have a business coach that, KPIs are, their thing. So I think there's, probably 100, you could have 100 different KPIs that you measure. There's data points of all kinds of different things. How many units you're turning every week or every, month, how many, all kinds of things. How many turnovers you're having in renewals, and how many new leases are coming up. So there's KPIs for all kinds of stuff. There's a handful of critical ones that you want to make sure you're hitting every month. If you're an operator, I'd have to review my list, honestly, to give you the right ones. But you want to make sure your occupancy is at a certain level. You want to make sure your turnovers are happening at a certain rate. You want to make sure your rents are going the right direction. Those KPIs are critical KPIs, and those need to be talked about on every property management call you have every week. If you're not hitting just those major ones, at least on your call with your on-site and your regionals with the property management company, you're neglecting what's going on. if you're doing CapEx, you want to make sure all your CapEx, those construction projects always have a way of slowing down or getting delayed. We had a project that they quoted us a paint quote for the building, and they said, "Oh, we can have it done in 3 weeks." I said, "Well, that's obviously 6 weeks from now, because it's November. It's November, and you're going to have bad weather." And sure enough, we're 8 weeks in, and they're still just finishing up, right? So, as you want to measure those timelines of things and what those are costing, what the expectations are. They tell you 3 weeks, but it's going to be 6. So you set your KPI or your performance indicator for, okay, this is the deadline for that. And then, are they staying on track for those things? So, you have to kind of just monitor that stuff as it goes through. But I think the critical KPIs for sure, just, off the top of my head, occupancy, turnovers, and then rent rates going the right direction would be like the 3 most important ones for the sponsor to know, I think.
Right. In addition to all the stuff you mentioned before, like the financials and all those, I mean, those should be included there so you can take a look and see the details of those as well.
Yeah, the other 110 that we measure, those all need to be in there too. But I think if on your weekly calls, you have to be hitting those. And, for us, on our asset business, we monitor all of them, but we summarize for ownership and for investors the critical ones, right? So I guess the VIP list of KPIs that not everybody needs to know every KPI every time, right. So you want to make sure you're just hitting the highlights, the top 10 or top 20 KPIs for investment summaries and stuff.
Yeah, because your investor shouldn't have to be an expert at that. Give them the critical ones, and you can give all the additional supporting data, but you don't need to send them 42 bullet points. No, it's just the top, like you said, 3 or 4 really is what matters. And then the rest, if you want to dig into it, because most of it, that's the whole point. They're paying us to manage their investment, their real estate. So we should be the experts on it and spoon feed them. Here's the important data that we need to make sure we're tracking and that you're aware of. So
yeah, and a lot of those aren't necessary until you get in the weeds on something like I talked to someone earlier today, actually, that their occupancy has gone from 97 to 75. And so that's an occupancy number that you should have been talking about every week, and it shouldn't have gone to 75. When it got to 90, you should have said, okay, well, how many phone calls are we getting? What's our website traffic? What's our marketing like? Those KPIs need to start to come into play, right? How are we being successful there? How many people we get this many phone calls? How many people are we talking to? Are we returning everybody's phone calls? Are we getting conversions? How many applications are coming from that, right? So those KPIs that you necessarily wouldn't talk about to your ownership every month, those become critical when you have an issue like occupancy dropping, right? So while they're KPIs that we measure for sure, like I said, they're not on the top 20, but when there's a problem, those immediately go to like a higher importance level, because you have to figure out, why is our occupancy going down? Is it, if the area has a stabilized occupancy at 94% and we're at 75, we're doing something wrong. We are doing something big and wrong, right? And we got to figure that out today. 75% occupancy and dropping is horrible business. So KPIs, while they may not be on a daily basis the most critical things, but you want to measure those things so that when you do have a problem, you can get into the weeds on those things and make sure you're doing everything that you can to get yourself out of a bad situation and into a good situation.
Yep. You do the classic root cause analysis and determine why that number is going down and take actions and you may have a couple levers to pull, but I love that. I love that. Wow. Drop some excellent knowledge here, Sean. You're phenomenal. This is great. And I really think you're doing the industry a great service by putting this together, this program together, and getting it accessible to, people that don't have a big corporation. They don't have somebody that's worked on Wall Street that's now their asset manager for the $1 billion worth of properties. That's wonderful. I would like to move into the lightning round. Are you ready?
Sure.
Okay. These are five fun questions just to get to know you a little bit better, Sean. First, number 1, what was your nickname as a child?
Well, so the funny thing is, Sean's not my real name. So I'll give you the story. My parents, I'm the last of 8 children.
Whoa.
And my parents wanted to name me after my 2 grandfathers. One was named John and one was named Wesley. So my real name is John Wesley Thomson. But they always wanted a kid named Sean. So they've called me Sean since I was born. So Sean's not my name, but that's what I've always gone by.
Oh my gosh, that's fascinating. Not even close to your real name. So all the legal documents don't say Sean. Nothing says Sean.
Well, if you're my banker or my lawyer, you know me as John. But if you're my friend, you call me Sean.
Oh my God, that is fascinating. That's really good. Number 2, are you a morning person or a night owl?
Yeah, I am not a morning person. I try really hard to do a better job of being a morning person. And as I get older, it kind of, I don't know, I'm shifting a little bit. But I definitely, I stay up way too late. I'd much rather sleep in and stay up late than I would get up and go to bed early.
Kindred spirits here, my friend. Kindred spirits. Number 3, what would be the first thing you do if you won the lottery?
How much did I win?
Let's say 10 million.
10 million, I wouldn't change anything.
That's not enough. That's what I heard. 10 million is once you're at 10 million, net worth, you're pretty much truly comfortable. But you need more than that, you think?
Well, I would just park that in a fund and start, just continue doing what I'm doing.
Okay, gotcha.
If I win 500 million, I'm going to call a family office buddy of mine and get him on board, and I'm going to go take a trip.
Got it. Very good.
Yeah.
Number 4, if you could live anywhere in the world, where would that be?
I like Dallas a lot, but I grew up here. We've lived in Colorado and a couple other places, but I'm always comfortable here in Dallas. But you think to yourself, where else could I live? And I want to try living in Spain a little bit, and a couple other places. I like Seattle, so I'm not sure, but I like Dallas a lot. But I might try some other places.
Okay, with 10 million, you can move around.
You could cover it.
Summer in the south of France and stuff like that. So yeah.
Right.
Okay. And then the last one, number 5, what one piece of advice would you give to new investors to help them get better returns? That's the one key nugget, Sean.
So one key factor for like a passive investor.
Yes, for passive investor.
Well, I think the critical thing for passive investors is don't really worry. I think they worry too much about returns. I think the most important things, if you're investing in alternative investments like multifamily and real estate, you want to find people that you can work with. You want to find operators that you're comfortable with, that are doing a good job. Things are going to go wrong in this business. Even on a good day, you'll have problems, and you want someone on your team that knows how to deal with those things or can deal with those things. They have the temperament for it. They have the personality for it. And hopefully they have the experience for it, or they have a team that has the experience for it. So you want to make sure that the people you do business with are the right people for you, right? You want to make sure that you have some alignment in how they sort of look at things.
Yeah.
And you want to make sure that, what they're trying to accomplish is something that you believe in, right? I think that's the first thing you want to do. Then the deal should be second. I have a lot of investors, they get wrapped up in, is it 18% or 17% or, what is it, my return rate? And it's like, well, that's important, but are you comfortable with who you're investing with and what they're trying to accomplish here? And do you think that's realistic, right? That's most important. I think I wouldn't, I see people investing in things because it has these great, big returns and all these promises, and then they just completely underperform because the team is not prepared to take on the challenges, right? So what they promise and what they deliver are two different things. So I think if you can work with a group that is going to give you the best shot at delivering whatever they're saying in the beginning, that's the most important.
I 100% agree. That was excellent advice, Sean. Excellent advice. Well, first off, I'm going to plug, because I downloaded your free report, Questions to Ask Sponsors About Asset Management. You've got that on your website. And also, I think you have one on KPIs that you should be looking at. So check out their website, download that. It's really good. I thought it was fabulous. How else can people contact you and get a hold of you, Sean?
The best way to reach me, I think, is just on our website, ThomsonMultifamilyGroup.com. And Thomson's spelled a little bit uniquely. I don't know if you can see it, but it's Thomson. There's no P. And that's probably the best place to go to reach us. We started our asset management business under one brand. We're changing our brand right now. So I could send you that website, but it's going to be changing in the next month anyway. So,
okay.
But I would think Thomson Multifamily Group, if you go there, reach out to us. We'll be happy to get you either the asset side or the multifamily side. Whatever your interests are with us that you want to contact us about, you can reach us through there, and we can get you sort of plugged in the right zone for us too.
Outstanding. And his information will be in the show notes below, so check that out. Thanks so much for being on the show, Sean, and sharing your knowledge about asset management. I think that's a really valuable and probably one of the most important roles in investing. So we truly appreciate your time today.
Yeah, thank you, man. I appreciate you having me on, and I enjoyed sharing everything.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.